All right, so I think it's time to do a follow-up on the gold market here because we've got some new developments this morning. Yesterday, I outlined what was going on in the gold market. It's pretty clear that there's a big player, probably one of the big banks, that is short gold, and they want to cover their shorts, um, as low as possible. And the first thing they need to do is break this trend line because there's going to be buyers as long as gold remains in this triangle pattern. And I showed you yesterday a pretty large attack on the gold market, and we've got an even larger one today. So let me switch this to the 5-minute chart. All right, so you can see the legal limit for trading gold futures is 3,000 contracts. Well, we've got um, two we got 10 minutes here where almost 20,000 contracts was dumped. And this is in the pre-market. Nobody is, no real trader is ever going to do this in the pre-market. There's not enough volume. So this is not somebody trying to sell to get out of a position or get the best price they can as they exit the position. This is somebody just dumping shorts into the market to break this trend line and trigger selling, and that's what it did. And you know, ever since the SEC banned short selling in the financials back in 2008, it's been pretty much no rules for the banks. They're just allowed to make money, any way they can. The rules don't apply to them. So, this is just one of the things you have to deal with when you trade the metals market. And this is not the end of the world. This this player bank that is doing this, at some point they're going to want to cover their position and then switch back to the long side. So you just have to understand what's going on, not stand on the tracks in front of them, and then be prepared to switch directions once this player covers their shorts and then goes long for the move back up. We saw the same thing here as we were working our way down into this bottom. People were becoming demoralized, and you know, we were hearing again calls for sub 1,000 gold, and once once the banks had covered their shorts, then gold turned and went back up, and the people that were panicking here just ended up missing a good rally because they became too negative, and they didn't, they couldn't see a turn anywhere in the future, and so they weren't prepared when the bottom came, and then the rally unfolded. Same thing's going to happen here. People will become demoralized because they wanted gold to turn and go higher when they wanted it, but the bank that's short gold doesn't want gold going higher yet. They want to cover their shorts down here somewhere, and then if you're patient and you wait, then once the bank gets out of their short position, then we're going to turn and rally and go back up. And this pattern is set up very nicely for a big move in 2019, one that should finally break out above this um, consolidation that we've been in for a couple of years. All right, so this is ever since the baby bull back here in 2016, gold has just been stuck in this um, difficult consolidation, and this has been um, resistance every time we've gotten there. But I think we're finally set up to break out of that. We've got a nice rounded bottom here, and we're forming the handle to this bottoming pattern, this cup and handle bottoming pattern. And once this bank is satisfied and they cover the shorts down here somewhere, then I think we're going to be set up to finally break out of this during the next intermediate rally, and probably into September, October is usually when the rally in gold will top. So Don't let this discourage you. You understand what's happening. This is just a bank that's short gold, and they want to make sure that they cover those shorts at a lower level. So just get out of the way. Don't stand in front of the tracks in front of them, and be prepared to turn and get into long positions once the bank has covered their shorts and the market turns and goes back up and breaks out of this pattern. And I think we're going to break out of this um, consolidation phase later this year.